Kit, I think a lot of people would want to go to sleep and then wake up in September, especially the way this market's been going. I'm just curious whether what you do in the meantime, right? I mean, yes, okay, perhaps the euro yen is a cross that you'd be interested in, but do you have a safe place to hold on and wait until there's sort of a more clarity in the market?
I'm tempted to say that in currency terms, this might be the time for the Swiss franc to start doing well. I have a sense that the Swiss don't want a cheaper currency at this point in time. They're going to be leaning against that if it happens, just because they don't like inflation and possibly they dislike inflation more than the rest of us, if it's possible for anybody to do that. So I think they'll benefit. I wouldn't be surprised if the market comes back and revisits some of the places like Australia, New Zealand, but perhaps particularly Australia, who've been perceived to be less keen to fight inflation than some others, despite the fact their economy is not in bad condition. Their terms of trade are epic. If they're forced to look at the world and think, yeah, we need to get on our bike and start hiking rates, then they've got some catching up to do. I don't want to hide in emerging markets personally right now if this starts to get dangerous, because rate rises hurt them quite a lot. It's probably too late to just hide in the dollar, in the sense that we've had such a big run. The dollar is very strong up here, having reversed some of this. But the Swiss franc's not the worst place to go and hide in when things get scary.